And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the show. My name is Al Gordon, and as always, I'm working on your financial freedom. And on today's show, what we're going to do is we're going to play a little catch-up. I realize that 2023 started, about a month ago. And I get that. I understand we went through the holidays. I understand that it was a brand new year. This is the year that we hope that everything is going to be wonderful for the United States. We hope that everything is going to be wonderful for the economy. We're hoping that 2023 brings us a lot of great things. And we already have, about a month's worth of distance between the beginning of the new year and today. And the question I have for you is this. What have you done to advance your real estate investing business? Now, for some of you, you've done everything that you're supposed to do. You've sat down, you've received the proper education, you've met with a mentor, and you're out there doing the business of real estate. You're looking at potential properties. You're determining whether or not those properties are a good fit for your portfolio. And if they are, you're acting on those properties, you're acquiring those properties, you're rehabbing those properties, and you're doing the things that you need to do to set yourself up for retirement in the next 5 years. But some of us, I'm included in this, by the way, some of us, we get overwhelmed by circumstances, or we just get overwhelmed by the fact that we're living our lives, right? I mean, think about it. Your life is busy. I know this for a fact. I used to have a life very similar to yours, where I was working very hard. I was working and I was focused on the mission that I was responsible for. You're probably the same way. And now I don't know what you do for a living. I mean, you could be a truck driver, or you could be in the United States Army like I was, or you could be a physician. But at the end of the day, you're focused and you're working hard to bring home income for your family. But here's the trade-off. For every day that you don't think about what you need to think about in order to get yourself going with real estate investing, that puts you 1 day behind the power curve. One more day behind the power curve. So here it is. It's February of 2023. And the question I have for you, once again, I'm going to raise it. What have you done to get yourself retired in the next 5 years? Now, some of you are sitting there and you're kind of looking down your shoes and you're kind of twiddling your fingers because you know I just called you out and it doesn't make you feel good. And I'm sorry for that. I am. I don't mean to be mean. I don't mean to make you feel bad. What I want to do, however, is I want to energize you. I want you to understand that this real estate investing thing is legit. It can get you retired in the next 5 years. So no matter what your age is, add 5 years to that and then say, hey, I'm X number of years of age and I'm retired. What am I getting at? Let's say you're 45 years of age. Let's say you get started with real estate investing. You decide to put your nose to the grindstone and you get focused on the things that you need to do. So what does that mean? It means by the age of 50, you will be potentially retired. You will have enough passive income coming in that it meets or exceeds your expenses of life. And that is the definition of retirement. It doesn't mean you have to quit your job, but you can if you want. Or you can change jobs. You could get rid of a job that you don't really enjoy doing, and you could trade it in for a job that you prefer to do. And if that job that you prefer to do doesn't pay as much as the job you're leaving, so what? So what? You have your real estate that's providing the income that you need to live off of. You really don't even need the job. I'm being that clear with you. Society is telling you retirement is what? The age of 65? As a matter of fact, some of the stuff that came out at the beginning of this year where they're talking about, they're adjusting the retirement ages. In other words, they're proposing, and it may have already passed. I haven't even been paying attention to this stuff, but they're proposing that the retirement age for maximum Social Security be moved forward. And I don't mean like from 70 down to 68. I mean the other direction, from 70 up to 72. They're talking about making mandatory disbursements for your 401ks and your IRAs an even later time in life. And what that means to me is that they recognize that those so-called retirement plans are failed ventures. Not very many people are very successful following that type of retirement plan. And I'm just going to be real clear with you. When they get to that point of retirement, whether it's the age of 65 or 70 or whenever they retire, they have saved up a big bucket of money, and they're going to start consuming that money. They're going to start living off of that money, and eventually that money's going to run out. And the big gamble later on in your life is, do you outlast your money? Because if you outlast your money, you've got a big problem. You've got a huge problem, because where are you going to turn to get more money? Well, the first thing you need to do is you need to get yourself educated. That's step number one. You have to understand how to invest correctly into the asset classes that make the best sense for your investing methodology. Yeah, but boy, I used a whole bunch of big words there, didn't I? What I'm really just trying to tell you is that you got to get started. You have to get started. You should become a member of Lifestyles Unlimited, because we have been in business for almost 33 years, and we have been educating people on the correct methodology in order to get themselves retired in 5 years or less. And the key thing is, or less. Yeah, not everybody needs the whole 5 years. I got it done in 2. Now, I'm not bragging. It's just how everything kind of fell in place for me. I will tell you, I laid out a 5-year plan, and that 5-year plan was designed to get me retired in 5 years. And at around the 2-year mark, Tina and I, we were sitting down reviewing our plan, and we realized, holy smokes, we've done it. We've done it. I mean, let's do the happy dance right now. Yeah, that's literally how it kind of went down. So once you get your education, once you understand how to correctly invest into real estate, the other thing that you need to do is you need to select a mentor. Yes, you need to have somebody who has been there, done that. They've gotten all the T-shirts. They've worn out the T-shirts. They went and got more T-shirts. You know what I'm getting at? I'm getting at you need to have a relationship with somebody who has experience doing exactly what you're attempting to do. And the reason you do that is because you have somebody who has more knowledge, more experience helping to guide you through the process. Now, you think about it. When you buy your very first real estate asset, do you think it's going to be a real smooth, easy process? Or do you think it's going to be kind of disjointed? Well, I will tell you this. It should be a smooth, easy process if you know what you're doing. If all of a sudden the process becomes disjointed, that tells me that maybe you've missed some key elements of the education, or you haven't spent enough time with your mentor to make sure that you're doing things the absolute correct way. Now, on today's show, I'm going to kind of pretend that I'm a mentor. Now, I'm going to be very clear with you. I am not a mentor. I do not mentor anyone. Now, I will educate you. I will advise you. I will give you information about how to do this correctly, but I am not your mentor. Your mentor is somebody that you select who has specific skill sets that complement what you're trying to do. Yes, exactly. All right. So if I were your mentor, one of the first questions I would have for you is simply this. Why did you decide to invest in real estate? Go ahead. Think it through for a minute. Why are you considering investing in real estate? Is it because you want to get filthy rich? Well, I mean, that's one potential outcome. Do you want to retire yourself in 5 years or less? Well, that's another potential outcome. Do you want to do something different than what you're doing currently for investment because you're not getting the types of returns that you feel that you need to obtain in the modalities that you're currently investing in? Maybe that's part of the reason you're investing in real estate. Maybe it's just you want to join Lifestyles Unlimited and hang out with me. I'd be totally cool with that. As a matter of fact, we've got our expo event coming up later on this month. We're going to be in Irving, Texas. We're going to take over the entire Irving Convention Center. We did this back in 2021, and it was a smash hit. I mean, it was a smash hit. So we decided we're going to just do it again for 2023. So if you're in shout of my voice, go ahead and go to lifestylesunlimited.com and take a look for the expo button. Click on that thing, and it'll give you all the information about our upcoming expo event. It'll give you an opportunity to get signed up. And I will tell you, there's going to be a lot of great content at that expo event. Expo is the event that we throw annually, that we bring 5,000 like-minded people all together. And we cover all types of different topics that are real estate related. And we bring all the movers and shakers into the room. We bring everybody else into the room. We have some good parties, believe it or not. There's some great parties that go on. But the most important thing is you have 5,000 people that are focused and dialed in to real estate investing, that are talking about their successes. They're sharing information with each other. They're building relationships. They're networking. It's a beautiful thing. So let me get back to that question that I asked you. Why did you decide to invest in real estate? Now think that through for just a moment. I'm not going to give you any suggestive answers, but I am going to ask you a follow-on question. What are your real estate investing goals? Yes, go ahead and write that down. What are your real estate investing goals? Why do you think I am focused right at the beginning on your goals? Is it because we're going to play soccer and you're going to score 1-0 and I'm going to lose? No, it's not that kind of goal. So when you're thinking about how you get from point A to point B, you have to put a plan together. You actually have to have a fundamental plan, a plan that's designed to get you from point A to point B. Now, at Lifestyles Unlimited, we already have that plan in place. We call that our roadmap, and it will get you from point A to point B. There are all different types of paths that you can go by in order to get to the result that you're looking for, to get to the actual place that you're trying to arrive at. It's a beautiful thing. Now, some of you would just try and do this on your own, and that's fine. I'm not telling you you're wrong. I'm just telling you it'd be easier if you became a member of Lifestyles Unlimited. It's really just that simple. So what are your goals? What are your real estate investing goals? What are the things that you want to accomplish? Now, I've suggested to you multiple times already that one of your goals might be to retire yourself using real estate assets and the passive income that comes from those assets in 5 years or less. That is a clearly defined and a clearly obtainable goal. So you have to know what direction you're trying to go in. You're having to figure out what the end result might look like. Here's another example of a goal. To have, say, $4,000 in passive income in the next 3 years. Is that possible? Can you do that? And the short answer is yes, you certainly can do that. Now, it depends on what resources you're dealing with. It depends on what's going on in the markets. There's a lot of things that can affect that, but I'm here to tell you, if you make a goal to develop $4,000 worth of passive income in the next 3 years, you can achieve that goal. That's the beautiful thing about goals. Once you set them and you put your eye on the prize, you will find that you are doing things along the way for you to achieve those goals. It's a really cool thing. All right, some other things that you need to sit down and figure out. You ready for them? Here they come. What's your actual net worth? In other words, what are you worth in the world? I'll tell you what, we're getting ready to go to break. And I'm going to give you the break to think about what your net worth is. When we come back from the break, we're going to break it all down. Stick around.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
I was at a seminar one time and a guy was sitting up there and he was saying, what you really need is you need the young, aggressive entrepreneur people to go out there and take that money and invest it with them. I walked up to the front of the stage and I said, hey, I'm that guy you're talking about that should be mentoring these people on how to do this. The guy goes, sir, we don't allow solicitation. And I said, no, you don't understand. I'm here to tell you I'm exactly the guy you were telling them to look for. And I'm willing to help them for nothing. And the guy goes, if you don't stop soliciting, I'm going to have the security come and get you. And I said, I can see you're a scam. I'll just leave. Everything I said had gone through the intercom. So I walked out of the seminar room and 200 people followed me. And that's how Lifestyles are started.
Are you ready to get up and follow Dale? Join us today at lifestylesunlimitedworkshop.com.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the second half of the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and as always, I'm working on your financial freedom. And on today's show, we've been talking about some of the things that you need to consider if you're going to start this real estate investing business. And I've asked you some very pointed questions, and I've caused you to think things through. What we're going to do in this segment is we're going to hurt your brain a little bit more, because we're going to talk about things like your net worth. We're going to talk about things like spendable income. We're going to talk about things like passive income. And when we get through with this segment, you should have a pretty good understanding of what all these things are. So, do you know how to calculate your actual net worth? Do you know how to do that? Most people don't. Most people don't, and it's totally fine if you don't. So let me just explain to you what net worth is and how it's calculated. It's really not that difficult. You ready? Net worth is the value of all the assets a person has minus all the liabilities that they owe. So let me give you an example. Let's say you own an automobile. The value of that automobile is considered an asset. Let's say the automobile is worth $25,000. Let's say you took out a loan in order to purchase that automobile. And let's say you have $20,000 that you owe against that automobile. Your net worth for the automobile would be $5,000. You own $5,000 worth of equity in that particular automobile. So when you sit down to figure out what your net worth is, what you do is you look at all of the assets that you own and you write them all down. Things like your personal residence. Technically, it's an asset. I think it's a liability because it doesn't pay you any income, but technically it would go on the asset side of your net worth statement. Okay. Now you line all of your assets up, and then you take a look at all of your liabilities and you line all of those up. So you take the total value of your assets, you subtract the total value of your liabilities, and you come up with something called net worth. Now, why do you need to know your net worth? Why is it important to know the net worth of yourself? It's very simple. It gives you a baseline of where you are financially, and it allows you to determine things that you can do to affect that net worth. And net worth is often used when individuals are considered for investments. Did you know that? Oh, absolutely. As a matter of fact, if you want to invest in multifamily assets, one of the first things a lender is going to ask you for is your personal net worth statement. Yeah, they want to see what your financial wherewithal is, because that gives them an indication as to whether or not you may have the potential to do what you do. Now, of course, you add on all the education that we provide at Lifestyles Unlimited, and that just seals the deal. It seals the deal. So you need to know what your net worth is. And here's another thing you need to know. Once you figure out what your net worth is, you have to figure out what part of that net worth is liquid. Your liquid net worth is very important for you to know, because what it tells you is it tells you that you have certain assets that you could dispose of immediately, and you could convert that asset to cash. Now, things like real estate are not very liquid. It takes time to sell real estate. It takes time to transact real estate. So it's not something that you can do very quickly. But things like your mutual funds, now those are very liquid. You could make a decision right now to cash in all of your mutual funds and you would be 100% in cash. And that's what I mean by liquid net worth. Now, why do you need to know the liquid net worth? It's that liquid net worth that's going to provide you the operating capital that you need to go out and buy these assets that we're talking about. You actually have net worth in things that you're probably not even considering. Maybe you've got whole life insurance. Maybe you've been paying for whole life insurance for a long time. The reason I bring that up is that's one of those places where I found liquid net worth. I had, something like a crazy amount of whole life insurance, and it had a cash value of about $80,000, meaning I could cash in all of that life insurance, and they wrote me a check for $80,000. That's exactly what happened to me. Now, you're probably thinking, well, isn't that dangerous, Al? Because you have things like insurance to act as a protector for you in case some peril occurs, right? And you're right. You're right. Was life insurance. So what did I do? Well, I just went and found term life insurance that was a lot less expensive, that gave me that same level of protection that I was looking for, and I bought that. So not only did I liquidate $80,000 and make it available for me to go use to buy real estate assets, I also reduced my monthly liability every month, because now I'm not paying for these very costly whole life insurance policies. I'm paying for term life policies that cost a fraction of what I used to pay. It makes it easier for me to cover my expenses, because remember, this is part of the equation, okay? This is part of understanding what it costs for you to operate your household. Does that make sense? Okay, so let me get back to some of the other things I think you need to figure out. What is your family's net spendable income? In other words, how much do you have available to spend on stuff that isn't necessarily a requirement of your household? The reason we want to know about that is because that gives us additional cash that we can use and inject into our real estate business. Does that make sense? All right. What about your family's total passive income? Okay, so passive income, again, is income you receive that you don't necessarily go to work to get. Passive income is what comes in when your resident pays you every month. At the beginning of the month, you cover the operating expenses of the asset, and whatever is left over is passive income. It's money that you invested that's returning a rate of return to you in the form of cash flow, whether that's mutual funds, whether those are stocks that you own. Take a look at your rate of return. You take a look at how much money you received from that enterprise, if you will, and you divide it by the amount of money that you put into the investment, and that gives you your rate of return. So there's two different types of rates of return. One is cash on cash. The other one is your capital gains. In other words, what is the asset worth in the current market, and what could you get for the asset if you chose to dispose of the asset? So you want to be able to look at those things, because those pieces of information are very, very important to you. Now, the last thing you've got to do is you have to get pre-qualified. Depending on the asset class you decide to invest in, you're either going to get pre-approved with a single-family conventional lender that will help you with the takeout financing on the single-family assets that you acquire, or you will get qualified with a multifamily conventional lender because you're going to do multifamily. So you've gotten yourself pre-approved. You know what direction you're thinking about going in. So the big question that should be on your mind is, where and what are you going to buy? Where and what are you going to buy? Let's answer the first question. What is it you're going to buy? Did you decide to do single family, or did you decide to do multifamily? So figure out what you're going to buy and figure out how much it's going to cost you. How much is it going to cost you to buy that asset? And then you have to figure out, how much money are you required to put down? Now, depending on how you're buying these assets, you either put 20% down or you put less down. You heard me correctly. There is a methodology where you can use less of your money. You don't have to go in with 20% down in order to acquire the property. As a matter of fact, in the single family space, we take advantage of something called hard money loans. And what those hard money loans allow us to do is not only buy a distressed asset, but also do a portion, if not all of the repair costs, which keeps our cash out of pocket to a small amount. As small of an amount as possible. As a matter of fact, my buddy Bruce that I keep talking about on the show, he sent me a text the other day saying his cash out of pocket, now get this, he bought a single family house, he used hard money, and he's in the process now of finalizing all the repairs. He was getting with the conventional lender because he's got to refinance out of that hard money loan and put that long-term conventional financing on. And when the lender ran all of his numbers, he said, okay, Bruce, here's what we're going to do. When you go to escrow and we get this refinance done, we're going to cut you a check for $2,000. What? You're going to cut me a check for $2,000? Yes, they're going to cut him a check for $2,000. He was able to buy this asset in a way that not only did he not have to put any of his own money into the asset, he's getting a check back for $2,000. Now, we call these types of properties unicorns. Yeah, these are unicorns. These are very, very rare and endangered things, but they do exist. And from time to time, they make themselves available. As a matter of fact, when Bruce was doing all the planning metrics on this particular property, he really thought it was going to be about $20,000 cash out of pocket for him. However, because of the way everything worked out and because of the value of the property came in higher than they anticipated, he's able to do this transaction for no money out of pocket, and they're going to write him a check for $2,000. Now, that to me is some pretty successful investing. So here's another question you need to take a look at. What is the maximum rehab amount that you're willing to do? Now, some people, they'll take on a train wreck. They'll take on a train wreck where everything in the property has something wrong with it. Now, other people, they're a little bit more cautious. They don't want properties that have foundation problems, or they don't want properties that have had signs of roof leaking. So if the roof is leaking, they don't want to buy the property. You have to figure out what you're willing to do. And it's a personal decision. It's not my decision to make for you. It's a decision you have to make. And you're going to make this decision alongside with your mentor. Yeah, that's the importance of having that mentor there, because I don't want you making big decisions like this in a vacuum. Run it by your mentor. That's why you have that mentor. How are you going to finance the rehab? Are you going to pay all cash? Are you going to use loans? Are you going to use hard money the way I described it a few moments ago? All of these different methodologies are available to you, and depending on what you're trying to accomplish, one methodology might be a better approach than another. So you have to understand how you're going to finance the rehab of the property. Where will the funds come from for you to put down on the property? So this gets back to that conversation we had in the last segment where I said you've got to figure out what your liquid net worth is, because it's that liquid net worth that you're going to utilize in order to buy these assets. Here's a great question that a lot of people don't think about until they've bought their first property. And here's the question. Can you do two properties at once? Can you? You can, but it might be up to your lender to make a decision as to whether or not they feel you have the experience to take down two properties at the same time. That's a conversation you have with your lender. It's also a conversation you're going to have with your mentor, because your mentor is going to have a pretty good feel for whether or not they think that you're ready to do two properties at once, or whether you should just do one property at a time. Yeah, it's just a business decision. That's all it is. Who are you going to use to finance your properties? Yeah, who you choose as your lenders is very important. It's very important. You don't want to just go to like the big banks or to the big mortgage brokerage houses like Rocket Mortgage or something like that. And here's why. They don't necessarily understand the nuances of the investing that we're going to do. Now, Lifestyles Unlimited, when you become a member, you get access to our vendors program. And in our vendors program, we have access to all of these different types of lenders that understand what we're trying to do as real estate investors. And therefore, we're talking with lenders that understand our business modality. And as a result of that, we have the right lenders that are available to us. Now, my personal belief is I prefer to have a mortgage broker as my lender. Yeah, a mortgage broker, because what that broker does is they go out and they shop the markets. They look at different places where we can get money from, and then they present all of those potential sources to me, and then I make a decision as to which one I want to pursue. It's a really beautiful thing. So as opposed to being identified for one particular type of loan, I could be identified for multiple types of loans. I'll tell you what, man, there's so much more I want to share with you, but I've just scratched the surface. Do this. Go to lifestylesunlimited.com, get signed up for a free workshop, and let's get you going.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.